Hey, thanks, Brian. The contract cost, you might think, what's this doing in a revenue standard? But the original ASU 2014-09 was codified as ASC 606, but it also added ASC 340-40 to the codification. And what that does is it codifies the guidance on other assets and deferred costs that relate to these contracts with the customers. So the first thing you want to do is determine, if you're looking at these costs, determine is this type of cost within the scope, is the contract in the scope of 606? So you don't, if there's other guidance out there, you apply that other guidance. So if you're talking about, producing inventory, there's guidance on accounting for the cost of inventory, for example. The examples that they give for costs that apply, the costs within the scope of 606 are cost to fulfill a contract, so setup costs, or cost to obtain a contract, which are commissions. Now, the capitalization criteria for the setup costs or the cost to fulfill, you would capitalize those costs if they directly relate to the contract or to an anticipated contract, if they generate or enhance resources that are going to be used to satisfy performance obligations in the future, and they're expected to be recovered. Now, commissions or costs to obtain a contract, you're going to capitalize incremental costs if they're expected to be recovered, and you're going to capitalize costs that are not incremental only if they're explicitly chargeable to the customer, regardless of whether the contract is obtained. Now, the notion of incremental here under 606 is cost that would not have been incurred if the contract was not entered into. So it doesn't include the cost of negotiating contracts or things like that. It's just the cost that would not have been incurred if the contract had not been entered into. And there's a couple of potentially big changes here for companies. For instance, this is not optional. You have to actually capitalize. There is a practical expedient we'll go on over on the next slide. But so for companies that have just generally expensed all these costs of obtaining contracts over time, can't do that anymore. You've got to capitalize them. On the other side of the spectrum is companies that have capitalized costs to obtain a contract, but they've capitalized internal costs like salaries and benefits of various departments that might review the contracts. Those costs no longer qualify for capitalization under this under 606 and 340-40. So again, two potentially fairly significant changes there. Now, I mentioned the practical expedient. The practical expedient does not apply to the cost to fulfill or the setup costs. But for costs to obtain or the commissions, you can expense those. You don't have to capitalize them if the amortization period would have been a year or less. Now, with respect to amortization, you're going to amortize these capitalized costs. The way you're going to amortize, you have to apply a method that's consistent with how the related goods or services get transferred to the customer. And depending upon the facts and circumstances of each contract, the amortization period might go longer than the initial contract period. So if you are anticipating contract renewals and the costs, the cost to set up, for instance, are going to benefit the renewal periods as well, you might very well go beyond the initial contract period when you're determining the amortization period. And impairment, these costs are indeed subject to impairment analysis, and you're just going to compare the carrying amount to an amount that considers the revenue and the costs that remain that you're still going to recognize under the contract. Now, there is a proposed ASU out there that might potentially change this.